Okay, everyone, welcome to today's analysis. We are going to be looking at both natural gas and crude oil in this video. We are going to be looking and targeting the July contracts. In addition, don't forget that closed captioning is available in multiple languages. So make sure that you click on your language if you need closed captioning. And if you stay until the end of the video, you're going to have the opportunity to look for some possible setups in both entries. And if you just prefer one of the two charts, then you can go down below to the timestamp and click on the particular chart that you want, so you don't need to waste your time looking at something that you may typically not trade. Okay, I will not be coming on camera for this video. I've been dealing with a little bit of a stomach virus, so I'm just going to give you some value on the Sunday to get you ready for the week. So here we are on natural gas. Again, we are on the July contract. Something that I have been talking about for quite a while has been that we're only going to look for sells on natural gas because of seasonality. Okay, there is less of a demand for natural gas. So we had been selling at this point, and we had been selling for most of last week as well. I am sitting on the weekly candle. Now, if we take a look at this candle right here, okay, we did break this weekly structure right here. So you can clearly see that we have broken structure, and that is a nice bearish engulfing candle. So as I talked about in my group over the last few days before Friday, right, we should expect natural gas to head back down to at least 3.30. And if 3.30 breaks, then we're going to expect natural gas to possibly come all the way back down to that 3.00 level, which is kind of where they had originally left when we started to buy natural gas, to possibly retest that particular area. So let's take a look now at the daily time frame so you can see the price action and kind of what is going on. So we are going to give you some levels, and what I want you to do is mark up these levels so that you have them with you throughout the week, especially if you are not yet in the trading club. And if you stick around a few more minutes, I'm going to give you the opportunity to join us here, especially for our live session later today. So on the daily time frame, you can see that we are right here now at an area where we have seen former support, okay, a former floor. So if we are going to get down to that 3.30 area, we are going to see a closure, okay, on a smaller time frame below this area here, okay? For me, I avoid any buys at this level because, again, I am more focused on where natural gas is for the time of year, and seasonality is starting to get warm. We're coming into the summer months, so I only prefer to sell natural gas than to buy natural gas. But that is a personal preference of yours, okay? If you were looking to try to take a buy off natural gas, then for you, a long position would look something like this, trying to come back up to these highs, and you'd have to close out this position very, very tight. So it is almost, a 8-to-1 risk to reward. But again, based on price action, I am not buying natural gas at this level, okay? I'm going to wait to see if we can get a break and a retest to come further down, or if we do go back up, just like we did here, we were patient until natural gas came back up to about 3.85 or so, and then we started selling natural gas. So I'm looking for the retracements up on natural gas to then sell again, okay? So what we've seen here is we've seen one wave, a smaller wave, and then now down. So we could see another wave up and then a continuation back down for natural gas. So this is going to be a key level, okay? Now, here on the 8-hour, we can kind of see what price did over the last few 8-hour candles prior to the market closing on Friday. Okay, so again, this is going to be a key level at this 3.40 level that we would need to see a candle to close below, preferably on a 4-hour chart or higher, if we are going to try to take this back down to this level. If we don't get this closure, right, then you don't sell natural gas. You wait for a retracement back up before we look for another selling opportunity. And here is a 4-hour glimpse right here. You can clearly see we had the breakout of this consolidation area kind of right in here. And then we've continued down to the next level. So natural gas is a very good energy sector to trade zone to zone or level to level. If you can stick to that, you will be very successful with natural gas. So again, my opinion is we wait to sell natural gas. Any push back up into these areas with a Fibonacci level sitting here at about 61.8 to 88. This to me creates the next sell zone, because not only do we target this liquidity in these two candles, then we look for that push up and then back down if we get a push that high on natural gas. If not, we can sell the break of 3.40 back down to about 3.30, and then we go lower and lower depending on price action. Okay, so before we keep going on the analysis, this is going to be your opportunity on this video to join me and over 300 other traders. Okay, if you want to join our private trading club, it's an app, a private app. It's a website. You can use it on your laptop. You can use it on your desktop. If you want to get your first month for 50% off, you can use code and join us for the first 30 days at 50% off. That's either going to be about $14 or $18, depending on which monthly plan you choose. Ridiculous to come in and get massive, massive value. Join us for daily live events each and every morning. You can join us today for our 6 o'clock Trading the Gaps every Sunday at 6 p.m. You can join us each and every day for live analysis starting at 8 a.m. Eastern Standard Time. Now that school is over, you can go ahead and grab your trade alerts that we do in here. We share charts. We got trade alerts. We just finished a successful currency trading week where we focused 80% on currencies with different opportunities. You have the opportunity to join the Elliott Wave Room, which is 2 of our full-time analysts giving you Elliott Wave structure. So if you choose that plan, you can come in and you can get charts and charts and charts and charts and entries and entries and entries. You have access to my video library, not only the feed of every video that we do. We just did a lot sizing strategy member trading day, but you also have access to an entire library of videos that you can learn from. You also have access to a blog style trader's toolbox where you can come in and you can learn more about trading psychology. You can learn more about different topics that we offer here. So again, that would be the opportunity for you to come in, and you're getting all this for $14 to $18 a month. And if you want to join our physical and mental space, we've got folks, because folks, the bottom line is your health is more important than the dollars you make. So we've got an entire section that if you need to get back on the fast track and moving, eating healthier, eating cleaner, we're going to motivate you to do that as well. So all of this access. So use code and join us today for a live session. Okay, so before we wrap up natural gas, just keep in mind that natural gas does like to have these crazy Sunday gap opens. That's why we do our live sessions on Sundays, to look at natural gas, to look at crude oil, to look at all the indices, and then we take them when they're right, and we take them with a strategy. So again, if you're not yet in the club and you're doing this on your own, keep in mind that you're going to see some pretty crazy gaps, usually with natural gas. But that's why I gave you the levels. You should still focus on these levels, but understand that natural gas gaps do not close right away. They could stay open for a few days, for a few weeks, for a few months. In very rare cases, they have stayed open for over a year. So use caution. Okay, so now we are going to jump into crude oil. Again, keep in mind that we are using the July contracts for this. Okay, so let's take a look at the levels here for crude oil on the weekly. Okay, we had become kind of buyers down around this 58-ish area. And then we've been talking about this level here where we kind of began to sell crude oil around this 64, 65. Now, crude oil has been a little bit choppier, unlike natural gas. We're going to show you that here. Okay, I do believe there's an opportunity for crude oil to possibly come further down a little bit more to about this 59, 58-ish area. We're going to be talking about this level here in just a minute as we drop down into the daily. So you can see here that we got very close to that level last week. We came down to 59.62 before price bounced back up. Now, if you look over here, again, this is just for information. It does not mean that it needs to close right away, but keep in mind that there still is this open gap sitting up here. And I'm going to tell you if and when we're going to close that. That's going to depend on price action. And I believe that if we close above 65, then we're going to be heading towards that gap at 70, but we are not there yet. So crude oil is another one that if you trade it level to level, you can be very successful. So you definitely want to look at this level at 64.16. You want to look at this level here at about 59. And then you do want to consider this level here, this floor, down at about 54.95. Now, some of the headlines over the weekend is that OPEC plans to continue pumping crude oil and increasing supplies heading into July and August. So is there going to be more crude oil in the market? It appears to be. The question is demand going to increase as well? Well, in the summer, there's usually a higher demand for crude oil as well. So again, we can't make predictions. What we have to do is let the price action tell us where price is going to go. Okay, so keeping that in mind, and of course, keeping the global tension in mind, crude oil is one of those that can spike at any time with any issues of war, with any issues of bombings, with any issues of oil plants and things of that nature. You have to keep that in mind when it comes to trading crude oil. So we're kind of between these two levels right now, 59 and 64. And so you've got to keep looking at this level right here and telling yourself, well, the best opportunities until these levels are violated kind of becomes this. You continue to, kind of buy in these areas, as some of our members right now are in a buy position on crude oil, right? And then vice versa, you continue to sell these areas until the level is broken, right? Because these are kind of the two levels that we're in right now. So as price is choppy in these areas, it becomes actually a little bit easier because if you're wrong, your exit is very short. Okay, if you're wrong, your exit is very short. So that's kind of the play for now as we look at crude oil, because we need to break out of 64 to the top side or 59 to the bottom side if we're going to project price dropping down to about 57 or 54, or to go up to 67 or to close the gap. That's it. This is what we have. And so that has to be the focus. Nothing else really matters. Not what you hear, not what you think. What matters is what these little candles are doing and what price action is going to tell you. Okay? Just like when we got this confirmation of this bullish engulfing candle here breaking this level and closing, that's when we bought, right? When we got confirmation that we saw this bearish engulfing candle take that, we sold. Same thing here. We sold. Same thing here. We sold. So I'm sitting more, okay, in these particular areas. I was sitting more as a seller than a buyer. So the next selling point is either going to be up here, unless we get price to close above, or if we get a candle to close below this level, okay, then we continue the opportunities to sell. Now, again, this is another one that as we look at this 4-hour, gives you another opportunity to look at structure and price. And so make sure that you have these structure lines built into your charts. Again, 64, let's just call them the even numbers, 59, and let's call it 55. This is the playing field right now, okay? If and when we close a candle up here around 65, 66, then you can look for that possible retest down and then the possible continuation up towards this gap area. And let's see if this arrow is going to work. There we go. Okay. But until we don't get this, this is out of play. This open gap is out of play until we get that. Okay. So we're very unstable right now with crude oil. As I tell my members, if it's too volatile to trade crude oil, don't trade it. That's why I focus a lot of energy on giving our members trades with the currencies, because they're much easier to trade than crude oil, gold, and indices. And that's why we were very, very profitable, catching over 400 pips last week with our currencies, while some of these did not play out because they were just too choppy. And when they're choppy, it's riskier. And when it's riskier, why would you want to force a trade, which is a very common mistake that I made a lot at the beginning. But now 9 years in, I avoid trading choppy markets unless I'm sitting on one side or another, and it has to come to me. If price doesn't come to me, I do not trade it. So we have to wait to see what happens here. Also keep in mind that Sunday gaps could be large. So if we get a huge Sunday gap, and again, we'll be live tonight to look at that. Okay, and let me go ahead and spell this correctly. Okay, Sunday gaps could be large. A lot of times the gap, for example, if on crude oil, it gaps down here tonight, okay, just assuming, okay, then you still look for structure, and then you look to go ahead and pick up a buy to close the gap, okay? Now, again, keep in mind that gaps could stay open a few minutes, a few hours, or a few days. Very rarely in crude oil does it stay open a few months, but it has happened. Same thing with if you get a gap to the top side, okay? If you get a gap to the top side, you look for structure, and then you look for a small position to try to ride that down to close the gap. So understand that these gaps are going to both be prominent, both with crude oil and with natural gas. Okay, so hopefully you got value both on natural gas chart and crude oil. If you did, you can do me a favor and hit that like button. I would greatly appreciate it. Don't forget to share this video with someone that you know who might be trading these energy sectors and can definitely benefit from as well. And if you're not yet on the channel, go do me a favor. It's absolutely free. You can subscribe. You can turn on your notifications bell so you don't miss out on this analysis. We're going to be ramping up more analysis coming up in the second half of the year, in between some travel in between. Last week, I apologize for not posting as much on the YouTube. I was not feeling that great, had some stomach virus issues. So again, we should be ready to go for this week as well. But if you're in the club, then you're getting our daily analysis, no matter how we feel, in there each and every day. Wishing you a fantastic trading week, and thanks for watching.